Today's lender review video, we're covering a mortgage lender that isn't commonly associated with bad credit and bad credit mortgages, but with their reach range, we've seen some great results for a lot of our clients. So in today's video, we're going to be covering Leeds Building Society's reach range. But first of all, if you don't know who I am, my name's Josh Tomlinson. I'm the managing director of My Mortgage Finder. We are a bad credit mortgage brokerage, and we help many customers arranging about £100 million worth of bad credit mortgages every single year. Now, it's highly likely that you have heard of who Leeds Building Society are, but in case you haven't, what we've done, like we normally do, is we've gone ahead and we've just asked ChatGPT. So, what they had to say, Leeds Building Society are one of the UK's top 10 mortgage lenders and the 5th largest building society, and they offer a wide range of mortgage products. So yeah, I would absolutely agree with that. Leeds Building Society, they're a very well-known and a large mortgage lender. They do offer a range of mortgage products, and although they aren't commonly associated with bad credit mortgages, with their reach range, this is actually a product that they do offer for a few people if you're the right person with imperfect credit. Okay, so into Leeds Building Society's reach range. So you get a little bit of a better understanding of this. Here's a screen grab that I took from the website earlier that I think summarises what they do quite nicely. So here it says Reach Mortgages. Reach Mortgages are a range of residential mortgages. They are here to help put home ownership in the reach of people who otherwise may face barriers to buying a home. And what it says here is the mortgages are for residential clients who are new to Leeds Building Society. So if you're a new customer to Leeds Building Society, clients who want to buy a new home or remortgage their current property, clients who want to apply for more than 75% loan to value. So that might mean that you have up to a 25% deposit, or you've got 25% equity in your home, so 75% loan to value. And clients whose credit score means they aren't eligible for a standard product. So very much like the Accord product that we discussed the other week, this will be looked at on Leeds' normal range. If you don't qualify for their normal products, then you can be assessed on the Reach products, and you'll be offered a slightly different interest rate and basically product offering. So how do Reach mortgages work? And what it says here is the same submission process for brokers, so that's people like us, mortgage advisors or intermediaries, as a standard residential mortgage. It says 1, submit your decision in principle in the usual way. So we would treat this application exactly the same as we would treat any application with Leeds Building Society. And then point 2 here is it says the DIP outcome. DIP stands for decision in principle, just to confirm. It will basically tell you if you're eligible for a product from Leeds' standard range, or if you're eligible for a product from their reach range. Now, what is worth just bearing in mind here, the two ranges will be priced differently. The standard range will be seen as a lower risk for the mortgage lender, whereas the reach range will be seen as higher risk. So with it being higher risk for the lender, Leeds Building Society in this case, it's understandable that the interest rates and the products are going to be a little bit more expensive. 3, it says, if you are eligible for the reach range, it's important that you reassess suitability of these products and any advice you have given to your client. The products are on the sourcing system. That's just jargon for us mortgage advisors, so that we know that you understand as the customer might be paying a slightly higher amount than you would on the standard range. And then point 4, it's really just saying progress the application. So just to kind of summarize, we would treat this exactly the same as we would the standard mortgage range from Leeds Building Society. We would make the application at agreement in principle stage, and at that point, we would know if you, the customer, qualify for a standard mortgage with Leeds or a reach range product with Leeds. So what you need to remember with the reach range from Leeds Building Society, you can probably see here there's no sort of hard and fast criteria on what they will and what they won't accept. This is ultimately just something that we're going to have to apply for at agreement in principle stage, and the system will use the algorithm that Leeds Building Society have and ultimately make a decision. They'll make a decision whether they're prepared to lend the mortgage at all, and then what type of range that it's going to be lent on. Remember, standard range, or in this case, the reach range. And the typical people that we say have the most success with this is quite a small amount of bad credit. So if you're having, or you've had lots of recent bad credit within maybe the last year, county court judgments, defaults, debt management plans, IVAs recently, this probably isn't going to be the one for you. But if there's maybe a few blips on your credit report 3 years ago, small values, they've been paid off, it was a blip and the track record recently has been good, then this really could be a good option for you. So like I normally do, I've now gone and pulled some rates from the website that Leeds offer on the Reach range. And what I've done here is I've got some 2-year fixed rate options. They do offer different types of mortgage products as well, but a 2-year fixed is very popular for a lot of people, so I thought these would be good to look at. And what you can see here, the rates start at 4.47%. That's at 80% loan to value. So for example, if you have a 20% deposit or 20% equity in your home, the rates start at 4.47. That has a product fee on of £1,499. They can normally be added to the loan. And it goes kind of right through to 5.31%. That would be with a 5% deposit or 5% equity in your home. And that obviously doesn't have a product fee on. And you can see there's everything between there on the 2-year fixed. Some of them have product fees, some of them don't. If you're wondering, well, do I pick a product fee or don't I pick a product fee? The things that are going to help decide that are really going to be the amount of money that you're borrowing is going to have a big impact on that. Because ultimately, if you have a product fee, then it's likely the interest rate is going to be lower. Or if you have no product fee, it's highly likely the interest rate will be a little bit higher, and you can see that reflected in the rates here. Obviously, you might not know how to work this out for yourself, and if you're thinking, I really don't know which option is better, with the product fee or without the product fee, that's something that a mortgage advisor will be able to work that out. So I would just say, don't try and work that out yourself, get some professional assistance and they will help you out with that. Also, what I've just pulled up on the screen as well, they do have some 5-year fixed rate products. Again, 5-year fixed rates are really popular for a lot of people. It's just worth noting they do have other products. 3-year they also have, so that is something that potentially could work for you. But yeah, the 5-year products here start at 5.53% and they go up to 5.2%. Again, you'll see some of them do have product fees, some of them don't. There are different levels of product fee on there as well. And that ranges from 80% loan to value, so with a 20% deposit, right the way to 95% loan to value with a 5% deposit. Once again, I'll always just say, if you don't know which product is right for you, that's why you do need to get advice, and a mortgage advisor will help you by picking the most appropriate product for you. So there you have it, Leeds Building Society's Reach range. Now, like we always say, this isn't going to be the perfect product for absolutely everybody. Maybe if you do have a bit more severe bad credit, it probably won't work for you. But if you do fall into the category of, I had some bad credit 3 years ago and I have repaired and made things right and my recent conduct has been really good, it could well be a great option for you. So if you do have any questions, like always, please feel free to pop those in the comments below. Alternatively, you can send us an email and the email is in the description. Now, thanks for watching. Please make sure that you hit the subscribe button and you turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.